Well, hello, everybody. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Services Division. And on behalf of our Commissioner David Geragino and our Director Elena Turner, we welcome you to today's presentation on sales tax for contractors. So we're glad to have you with us. And we have Miss Katie Julian here, and she's going to be going through the information as we proceed here. We do call to your attention the information on the slide. If you are joining us here live today, make sure that you are following this information here too. We'll be pointing out the resources at the bottom of this slide as well for you to remit questions to us if you have other issues that are going on and you want to get more information, more details. We do want you to either go to our website or to send us an email or to call us about this and any other tax subjects that we have. So with that, I'll go ahead and turn this over to Katie. We're going to go through this presentation and I'll kind of offer some comments as we go along and let Katie kind of drive the show here. So Katie, take it away. Thank you very much.
Thank you, Billy. Hello, everyone. Thanks for joining us today for our May tax webinar, which is Sales Tax Issues for Contractors. As you may be aware, we offer this free tax webinar every month on the last Tuesday of the month. Next month, our topic, in case I forget to tell you later, is on tax credits for headquarters and data centers. And then in July, last Tuesday of the month, our tax webinar will be on legislative updates to fill everyone in on everything that's passed and is going into law soon following this year's General Assembly that just wrapped up. So on to today's topic, sales tax issues for contractors. We are going to be going through some general sales tax laws and then most importantly, discussing how those sales tax laws specifically apply to contractors. There aren't necessarily very many specific rules for contractors, but as contractors have a very distinctive business model that they go by, there are sales tax issues that apply pretty regularly to a lot of contractors, and we're just going to go through those, discussing some frequently asked questions, sharing some resources with you, and so on and so forth. So we'll move right into it here. And first things first, on this slide, we're going to talk about some basic sales tax law stuff here. The Retailer's Sales Tax Act imposes tax on tangible personal property and certain enumerated services, and that's in the TCA 67.6. All of Part 2 is sales tax laws. You can see on this slide here on the graphic, basically the two general areas that sales tax falls into is sales of tangible personal property, and sales of services. So regarding sales of tangible personal property, it's usually taxable unless specifically exempt by law. Sales are exempt if the purchase is made by an exempt entity, if the product is exempt, or if the usage is exempt. Sales of services. Sales of services are generally not taxable unless specifically listed by the law as being taxable. So that applies to contractors here, in that a service such as the installation and repair of tangible personal property are a service that in our law is taxable. So very applicable to contractors there. So most contractors fall under the situations listed on this slide. So let's take a look at this. You're basically looking at, is the contractor going to be liable for paying sales tax on the products they buy to use? And are they going to be charging their customer sales tax? So regarding paying sales tax, a contractor is the user and consumer of what they acquire when they perform a contract, such as lumber, paint, brick. Contractors are going to pay sales tax on these items when they are purchased in Tennessee, and they're going to pay use tax on the items when they are purchased outside of Tennessee. So in other words, contractors are going to pay sales tax on the things they buy to use in the job. So any building materials, tools, you're going to pay tax on those. We'll talk a little bit more later about how you can build that price into your bid and invoice. But regarding charging sales tax, services provided to tangible personal property, you're going to charge sales tax. You're going to charge that customer sales tax if you're providing a service to tangible personal property. Sales tax of tangible personal property sold to a customer, you're going to charge sales tax there. And products or services provided to real property, you're not going to charge sales tax. You can include the sales tax that you've paid on materials in the price of the bid or invoice, but it's very important to note here that a customer should not be directly billed for sales tax by contractors when the service is done to real property.
Katie, let's talk about this for just a second. So, what we have here basically is two different things. We have apples and we have oranges. So, let's talk about the apples at the top. And this is oftentimes very confusing for different contractors because even when they ask us questions, when they send us an email or maybe call our call center, sometimes they get mixed up and they say, well, I'm a contractor. Am I subject to sales tax? Well, let's think about the way we're asking that question. I mean, contractors, as it says there in that very first bullet, are the users and consumers of what they acquire to fulfill their contracts. So when you go to that home improvement store, that supplier where you're getting these materials so that you can do renovation or new construction, you're going to pay sales tax as a contractor. Okay, so that's the paying part of it. That's what you do. You're buying things so that you can perform a service to real property, and that makes them taxable. Okay. Now, as far as charging the sales tax, like it says, and talking about the oranges and our apples and oranges analogy here too, um, if you were doing something to tangible personal property, something that you can move, then you could charge sales tax to that. One example we might think of on this, and we may use it a little bit later here too, is maybe someone who comes to your home to repair appliances, things like that. So if they come to your home to repair appliances, they're going to be repairing something that can be easily removed from your home or replaced. Maybe a refrigerator would be another example on that too. So if you're doing that, you're going to charge sales tax on parts and labor. But most contractors aren't doing that. They're doing stuff to real property. Okay. And like it says there at the bottom, products or services provided to real property, you're not going to charge sales tax to that. What you're going to do is you're going to be smart as a business person and you're going to build that into your bid price. So you're going to know that when I bid on this project, when I go and acquire my lumber, brick, plywood, etc., down at the store, the store is going to charge me what, almost 10% extra tax, that I've got to consider. So when I do that, I got to make sure I charge my customer an appropriate amount so that I'm not ending up eating into my profits. So that's the point I wanted to make on that, Katie. Thank you very much.
So I've got a question that is related to that, Billy. So when it comes to the second bullet down under charging sales tax, if the contractor is actually selling tangible personal property. Let's talk about this scenario. So if a contractor is going to be installing or putting in a refrigerator. So we'll talk about this a little more in a minute, but a refrigerator is something that's easily removed. You can take it with you when you move. We're going to consider that tangible personal property, but they're going to go get that refrigerator from the supplier, take it to their customer, and install it. They're going to include the price of buying that refrigerator in their bid and invoice to the customer, right? Along with putting it in and hooking everything up and hooking the water line up, so on and so forth. Can
Correct.
they use their resale certificate to buy that refrigerator and then they're selling it to their customer? Would that be a scenario where they can do that?
It could be that way, Katie, but normally what we find out on most of these people who install tangible personal property is that the customer themselves has probably gone out and acquired the property directly. Okay, so they may have gone to the big box store and bought the refrigerator, and here comes a company, a third-party company, to come in to like bring the refrigerator into the home and to set up the water line and to make sure that all the drawers are functional, et cetera, et cetera. And for that, it is X amount of dollars. And that's what's taxable as far as that goes. But really, the one thing you have to think about here is somebody's paying sales tax somewhere. Okay. So if the customer has not paid sales tax already, they would pay sales tax to this business person who apparently in your example would be someone who sells refrigerators and installs them. So if that's the case, if you're going to have a warehouse full of refrigerators, good for you. And you should buy them on a resale certificate because you will charge that customer for the refrigerator and any of the incidentals that go along with that.
And we're going to talk about that scenario here in a minute with contractor dealers as well. So
Okay. Well, thanks. Thanks a lot, Katie.
we're going to dive a little deeper in here to discussing the difference between tangible and real property. There's a fine line here. Tangible personal property is personal property that can be seen, weighed, measured, felt, or touched, or that is in any other manner perceptible to the senses. So, as we've already discussed, installation and repair of tangible personal property is taxable. Real property is property that becomes attached to realty. So, although real property can be seen, touched, etc., it is not taxed in the same manner as tangible personal property. So the sale, repair, installation of property that becomes a fixture, so that in other words, that becomes real property, is not subject to sales and use tax when you're charging your customer for your services of the sale, repair, and installation there. The person or entity installing or repairing the real property is subject to sales and use tax on the purchase of property being installed and any materials used in the installation or repair. Regarding repair services and installation services. So as I mentioned on the very first slide with tax law, sales tax law, uh, only certain services are specifically listed in our law as being subject to sales tax, and repair and installation are one of those. There are many others or several others. We're not going to go into those today because they're not applicable to contractors, but this one very much is applicable to contractors, repair and installation services. So repair services of tangible personal property, again, are taxable, and that includes work done to preserve or restore tangible personal property, mending or correcting, alterations, refinishing, cleaning that is necessary part of any repair work, service calls where any repair work is done or contemplated, and changes in the size, shape, or content. Charges for installing and repairing tangible personal property that remains tangible personal property after installation are taxable. So a good example, as Billy mentioned earlier, of tangible personal property repair is with companies who repair appliances in your home. These appliances can typically be removed and replaced without damaging real property to the home, without damaging real property. So the appliance repair company will charge their customers parts and labor costs there. This slide dives pretty deep into the difference between tangible and real property, although we'll discuss here in a minute how there are a lot of objective factors in determining whether something is tangible or real property. So on the left-hand side, you're going to see some examples of real property in which you would not charge tax on repair and installation. On the right-hand side is a similar item to what we're looking at that's real property, but that's actually tangible personal property that you would charge tax on the repair and installation of. The first one is a building on a foundation. We're talking a home, any building. That is real property. I think that one's pretty indisputable. However, a portable building, whether it's a shed in the backyard or any kind of portable building, that's going to be tangible personal property. It can be easily moved, not necessarily easily. You got to have the right stuff there. Carpet laid in a building. So wall-to-wall room carpeting, that's real property. A rug, same texture there, same actual item. They look the same, they feel the same, but a rug is easily removable. So we're going to consider that tangible personal property. An HVAC unit that's attached to a building and is real property, but a window air conditioner, easily removable, that's tangible personal property. Custom window treatments, custom built-in bookshelves, and then curtains purchased at a store or bookshelf purchased at a store. Difference there, the main keyword there is custom. Custom treatments, custom built-in anything is usually going to be real property. This is an interesting one. In-ground swimming pools or spas, real property. If there is an above ground pool, it is tangible personal property. And the way we have determined that what's considered above ground is anything that's 6 to 8 inches below the ground. So it could still be an above ground pool, but be bury just a little bit into the ground and still be considered tangible personal property. Another key word here, custom shutters, custom awnings, custom carports. Those are real property. On the other hand, in-stock versions of these that can be removed without causing damage, tangible personal property. Built-in appliances, real property. Removable appliances, tangible. So again, if you can take it with you when you move, we're going to consider that real property. And there are a lot of objective factors to consider here. Billy, did you want to hop in?
Yeah, I thought I'd just bring up a couple of things here, just from the perspective of what we see as things that taxpayers ask us about. These are good examples that Katie has brought up here. You know, um, an HVAC unit, that's very common. Those have to be replaced, but they are considered to be part of actual real property because normally they're not taken out of the property and put somewhere else. They become part of the property because of the ducting and things of that nature too. But one important thing that we should probably all remember here is that our good pals here at the Department of Revenue are not contractors. We do not know exactly every sort of nuance about construction that you guys as professionals do know. Okay. So if you're that professional contractor out there and you know that if I put this into real property, I can't take it back out without messing it up or the real property up, then that's your indicator right there about whether it's into real property or if it remains tangible. One question that we have received and that we get pretty often is on the walk-in refrigerators, the ones that are used in food service, things of that nature too. Most of the time when those are put into real property, they're intended to stay with that building unless that building is like significantly remodeled or turned into a different use, and in which time the walk-in unit would probably be taken down or destroyed or something like that. So that's usually considered to be a improvement to real property. Okay. But we just don't know about every single thing, but we can give you our opinion about it, and you're welcome to ask us based on what our take would be on it. But what we want you to do is to use what the law says and what the previous slides and what this slide say too about the taxability of what you're doing. Okay. And it will be different from one thing to another. I
Mhm.
can't tell you that every person that installs carports is subject to sales tax. That's not true. Because if you screw a carport together out of metal pieces that I could take down in an hour or so with a fully charged um, drill and take the bolts back out of it and move it somewhere else, I don't think that's permanently attached to real property, right?
Right.
But if I'm a carport installer and all I do is build literal wooden carports on the sides of houses built in concrete to the foundation, not ever going anywhere, absent a tornado, let's just say. But besides that, that's a difference, so we can't just use the always word here because it doesn't work out like that. So anyway, I just thought I'd point that out because of the things that we get in the office and questions in this nature. Okay.
Yeah, when I was researching this, Billy, to put this presentation together, I saw more letter rulings on this topic than I've seen in a long time referenced because just of what you're saying. Sometimes it's just not super easy to determine. And if 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 you ask us, is this taxable or is this not taxable, we're going to do our best to get to the bottom of and sometimes we have to involve our legal staff to help
Mhm.
determine if something is taxable or not. And tangible versus real property is one of those subjects that's not always.
Yeah, and since we're talking about letter rulings, let's go ahead and talk about it right now. Letter rulings are great because sometimes we have resources on our website. You call, ask us questions, you send us an email, you look in our tax manuals, and you have come up to a situation where you can't really make a really good decision, then it might be time to think about a tax ruling, particularly if it involves a large amount of money. Okay. If you're in a business where you're doing, quite a bit of extensive work and you want us to make a ruling on it, you submit that to us. We have this information on our website as well. You can look up about how to get a tax ruling. And there is a fee involved. I believe it's $500 if I'm not mistaken. And for that, you receive an actual legal binding opinion from the Department of Revenue about your situation. And that way, you don't have to guess whether the Department of Revenue agrees with your situation or not. You know it already, and you can proceed forward and be confident with what you're doing. So, again, something involving multi-thousands of dollars, it's probably worth a shot at that. By the way, also one thing to point out too is our legal staff reviews these requests. If for whatever reason there's already existing information out there that Brightline answers your question, they will answer your question instead of charging you that fee and doing the ruling. So I just thought I'd throw that out at you as well. They're very good at what they do. They've done this for a long time. They're experts. But at any rate, we're also glad to help you with our regular questions through our email service and call center, etc. Okay?
For sure, yes. But hopefully this will kind of gel in your mind as a way that you can use some objective reasoning to figure out if something's real or tangible property and if you should be charging sales tax on the service of these items. But again, feel free to reach out to us anytime if you're questioning whether or not something is. Oops, let's see here. Here we go. Sales price. So whether you're charging sales tax to your customer uh, for services or not, here's a list of what you can include in the price you're charging to your customer. You might find this helpful. Sales price may include cost of property sold or materials used, labor and service costs, interest, losses, transportation costs, taxes imposed on the seller, any expenses of the seller, charges for any services necessary to complete the sale, delivery, and installation charges. So again, note that you'll only charge sales tax on the sales price of services on tangible personal property. And if the service is to real property, you'll not charge the tax, but you can build it into your bid and invoice. So we kind of touched on this a few minutes ago, contractor dealers. So an entity that provides some real property installation and also may make sales of tangible personal property to others without installation is what we refer to as contractor dealers. An example here would be a window company. Let's say you have a company that sells windows. You're going to buy those windows you're going to use your resale certificate to buy the windows without paying tax on them. Your company sells those windows to the general public or to other contractors. You're going to charge your customer sales tax when they buy the windows. However, if your company also has a division where you contract out to install the windows, you can basically pull those items from your inventory to use when you're performing contracted installation, and you're going to pay for the use tax on those on line 2 of the sales and use tax return. Sales in interstate commerce are exempt. If the contractor dealer makes sales of materials without installation and ships or delivers the materials to a customer location that is outside of Tennessee, this transaction is going to be exempt from Tennessee sales tax as a sale in interstate commerce. And you'll report that on line 1 of the return as a gross sale and then exempt it back out over on Schedule A as a sale in interstate commerce. That's a pretty common scenario here is contractor dealers. All right, now we're going to talk about some exemptions. There are some exemptions that can be used for some contracting situations. What you see here is a listing of the types of exemptions under Tennessee sales tax law. There are 3 types listed here, so let's take a look. Obviously, a contractor is not an entity that is exempt from paying sales tax because they're a contractor, but there are some entities that are exempt from sales tax, such as qualified farmers, manufacturers, nonprofits, resellers, government agencies. Now, most of these are going to require an exemption certificate. So if you're a contractor that's doing work for that's doing a repair on tangible personal property, let's say, for example, for one of these exempt entities, you're going to take their exemption certificate and keep it on file and then not charge them sales tax on the service of that tangible personal property. Product-based exemptions. Statute determines what products are exempt. This is not going to generally apply to contractors because we're looking at healthcare products, newspapers, textbooks, things like that. Not very many items that are, not very many products that are exempt that contractors are going to be dealing in. Use-based exemptions depends on how the product is used. We're going to talk a little bit more about this here in a few minutes. An example is pollution control, green energy production, industrial machinery, etc. And again, these are going to require an exemption certificate. There's more information on that we're going to go into here in a few minutes. All right, contractors and exempt entities. I've got an important notice here. I'm going to pop into the chat for you. It's important notice 1516. You can find that on our website under important notices, but it's relevant to exempt entities. So contractors cannot use an exempt organization's authorization for exemption to make tax exempt purchases to fulfill contracts with the tax exempt organization. Exempt entities must purchase their own materials using their own exemption certificates, and funds must be directly from the organization, so the payment used directly from the organization. Churches may purchase materials used by a contractor in church construction using the church's certificate of exemption and the church's payment to be exempt from state and local taxes. Same goes for a private nonprofit college or university. They may purchase materials used by a contractor in construction using their certificate and their payment. The difference here is that it exempts them only from the state level sales tax, not from the local portion of the sales tax. So talked about some use-based exemptions here: pollution control, green energy, industrial machinery. Pollution control, green energy, these are not going to be very common. Industrial machinery, a lot more common. There are exemptions for these types of entities, and a contractor can be issued an exemption certificate if the contractor provides or installs items that will be owned or leased by the qualifying customer. There's an application process. The application must be submitted for each project that the contractor is working on for pollution control, green energy, or industrial machinery. Upon approval, a separate exemption certificate will be issued to the business and to the contractor. The contractor's exemption certificate will only be valid for that specific project. And each entity, that is the business or the contractor that's issued an exemption certificate, will have a location ID under their sales and use tax account that matches the exact location of the project that the application is for. And this is something that can be done retroactively. So if you're a contractor that has bought products for one of these qualifying businesses or projects and you did not get an exemption certificate, you can apply for it retroactively and then file a claim for refund along with your purchase invoices. And there's a process, pretty exact process to follow there, and you can find more information about that process on our website. Go to tn.gov/revenue and then click on under taxes, click on sales tax and then exemptions. The forms for these, if you click on forms on our sales tax page, great instructions that just line by line tell you exactly what you're going to need to do. We also, I think this next slide here, we've got some great resources about these exemptions and how to apply for them if you're a contractor as well. We have a past webinar that we did. It was around this time last year, we did an exemption specific webinar that talked about green energy, pollution control, industrial machinery, that goes into a lot of detail there. You can view all of our past webinars. I'm looking at the third main bullet down here. I'm skipping ahead to talk about some past webinars. Go to our website, tn.gov/revenue. Click on taxpayer education, then tax webinars, and then under the webinar video archive, you'll see there's one that we did last fall on completing the sales tax return, because we're not going to go into that during today's webinar. the webinar we did last October, I believe it was, on completing the sales tax return goes into a lot of detail about everything you'll need to know about filing a sales tax return. We did a webinar last year on services subject to sales tax that you might find helpful. And again, this exemption specific webinar we did, you can find all these on that webinar video archive. We've got great, working in reverse here, going up, FAQ articles from tn.gov/revenue. Click on revenue help and then sales and use tax. Lots of great frequently asked questions there, articles that are going to address a lot of these topics. You can type in a word like contractors into the search bar under help and come up with lots of great helpful information. General information, as I mentioned, you go to tn.gov/revenue, click on taxes and then sales and use tax. I don't have this on here, but we also have a sales and use tax manual along with all of our other manuals for our taxes. For that, you're going to go to tn.gov/revenue and click on resources or tax resources and then tax manuals. One thing we did not touch on at all today, because we were speaking specifically about sales and use tax issues for contractors, is business tax issues for contractors, because there are some very special and specific rules for contractors with regards to business tax. We have a great business tax manual that will answer pretty much every question you would have about contractors and business tax and licensing. There's a whole chapter in there for contractors, but our tax manuals are a great resource. As Billy mentioned before we got started, we want you to reach out to us. We love doing these webinars, and we hope that the information gets out there and answers a lot of your questions, but we know that you're still going to often have questions for us, and we're happy we've got a great support team at Tennessee Department of Revenue. You actually get a human being when you call us, and quickly, unless it's tax day. And if you email us during business hours and sometimes even non-business hours, if insomnia and log in the middle of the night, right? But you can email us. We'll get back to you right away at revenue.support@tn.gov or call us 615-253-0600, and that's Monday through Friday, 8 to 4:30 Central Time. So if we did not answer your question today, or if you have an account specific question or actually questions about any other taxes, any questions, feel free to email us or call us at any time. Billy, is there anything that you'd like to add?
I just wanted to tell everybody thanks for coming to the webinar today, and we're listening to this recording. We appreciate the opportunity to get in front of you to explain Tennessee tax laws in a way that we hope is very helpful to your understanding of what your obligations are. Just to kind of reiterate a couple of main points here too, and sort of like tax 101, someone's paying tax. Who is it? You know, it is it you? Is it me? Is it the contractor, or is it the customer and all that? Ultimately, the laws of the state control who's ultimately responsible for remitting the tax. Okay, so what we've told you today is about contractors and the fact that contractors are definitely considered the users and consumers of what they use in their contracts too. There are some exceptions with the exemptions that Katie just mentioned, and some of the certificates and things of that nature too that come out there that are that sometimes are advantageous, but most of the time don't come up in general talk. And then we talked about the difference, of course, with real property versus tangible property, and how hard it is sometimes to determine what is what. But again, when you reach out to us and go to our website or give us a call, we'll try our best to try to help you or get you in touch with other people in the department that would be the ones that could help you even more. Okay, so I think that's really about it. But Katie, thank you for your presentation.
Sure thing. Yeah, we'll see y'all hopefully next month when we carry on with some more sales tax topics. And also, I forgot to mention, we have an upcoming new business workshop. We've started these back up. We used to do them in person before COVID, and now last April we started our first virtual one, and we have another one coming up in July, on July 6th. This is a little bit of a longer webinar. It's about 3 hours, and we're going to go over basics and some specifics on sales tax, business tax, and franchise excise tax. Touch on a few other things, registering for taxes. Lots of pertinent info for new businesses, so spread the word about that, and you can register for that new business workshop on our website, same place where you registered for this webinar, except you'll click on new business workshops on our taxpayer education page. With that, just want to thank you all for being with us, and please take a moment to complete the quick survey that will pop up for you as you leave the event, and we will see you next month.
Thanks again, everyone. Bye-bye.
Thanks, Billy.
Bye, Katie.